Good morning, afternoon, or evening, ladies and gentlemen, Allincrypto here, and welcome back, guys, for another jam-packed daily cryptocurrency market update. If you are new to this channel and finding yourself on my videos for the first time today, don't forget to check out that subscribe button because we drop an update just like this one every single day around 1 p.m. UK time to help you guys stay up to date with the latest and greatest happening in the crypto space, but also the broader markets. And that is exactly what we're going to be doing in this video. There is just so much going on, and Bitcoin right now, there is zero chill for. Bitcoin at the time of recording is currently at 51,600. It has now completed the right shoulder that we were looking at and is now on its way to 150,000. And actually today, Bitcoin is back at $1 trillion in terms of market cap. I think it's actually overtook Meta, which was previously Facebook, that have a reach of 4 billion people across their three platforms: WhatsApp, Instagram, and of course, Facebook or Meta or whatever we're calling it. This is huge. This is massive. Bitcoin is winning on all accounts. And towards the end of the video, or at the end of the video, I'm going to be playing you a clip from Tony Robbins, who I'm sure many of you are familiar with, that talks about the unfair nature of markets and how this is now changing. You know, private markets, typically you have to be an accredited investor to get your hands on. However, with the rise of blockchain, this is all changing markets. There is a transformation in regards to the financial markets taking place, and blockchain is at the heart of it. And that's an opportunity I don't want any of you guys to miss. It's why we founded the channel in the first place. But we'll look at all that. We'll look at the clip from Tony Robbins towards the end of the video. We're going to really just be focusing on what's taking place with Bitcoin right now, where we're at. We were looking at, over the past 2 days, a slight pullback as lots of technical levels were ran into. We did say, though, however, don't bet on it. And you did get a bit of a pullback yesterday. Obviously, we're going to look at the CPI and what took place there. We'll be bringing the dollar into things. A lot to cover. This is a real 360 view of the markets, where they're at and where they're going. But let's start things off by just addressing the $1 trillion market cap of Bitcoin. And you can see here, Bitcoin is now at $1 trillion in terms of market cap, and it currently sits at 51,600. Let's dive over to the charts. You guys will know the plan, and we have been unbelievably right on Bitcoin and its direction, whether that was last year getting back into the cryptocurrency markets when Bitcoin was at 16K, or where we're currently at today, expecting this kind of bigger macro head and shoulders to play out, just in the similar manner that we saw the micro head and shoulders play out. And the fact that we're looking over the past couple of days, and we'll drop down the time frames and show you this, we were looking, you know, we had a number of short-term targets for Bitcoin. Both have been met. We were looking, let's use 3 hourly, at a potential rest period. And you can see it took a small rest at this smaller head and shoulders, that the neckline was around our 42K target given in 2023 that came from that smaller head and shoulders. And then we had a broader head and shoulders, and actually that target got met. You can see you sold off. I was actually expecting a bit more of a break. I was looking at Coinbase, where that was at. We did get that break yesterday, but look at what the market's doing. And this is the nature of the beast that you were dealing with. And we've said this, all you need to do as an investor is figure out the trend. We were exceptionally early on calling the trend change from a bear to a bull, looking at bullish divergences, and then we had structure that confirmed it, and the market continues to reward you as you go along. But this is the nature of the beast that you're in. This is a bull market. Don't go short in this market. Yes, you can look at periods of rest like we did, but the market will show you. You know, it did have that rest yesterday, and all it did was break, come back to support from this area of breaking, which was also a key technical target, and now it's gone on higher and is likely going to continue to do so. And going back to the bigger time frame, we want to see this neckline get taken with momentum. So this is now a triggered pattern, in my opinion. The target for this pattern is around about 150K, around about there, depending on what exchange you use. We're not, however, seeing volume, and I think that this has to do with the majority of volume taking place on the ETFs. So this is this is BlackRock's iShares. Just to quickly dive over to a tweet from Eric Balanchunas, you can see net cumulative flows for the 10 Bitcoin ETFs, including GBTC, has doubled in the past 3 days, over 3 billion. For context, it took gold nearly 2 years to get to this point. After another $500 million yesterday, the 9 ETFs, nearly $10 billion in flows. And this, of course, is the chart. This is insane. Bitcoin has won by all accounts and is going to continue to win, given what it's up against, and that is the failing fiat systems. And we're going to look at a clip from Tony Robbins talking about, you know, private markets and actually how this is being changed. And actually, Bitcoin is at a stage where it's now going to play a role in the markets. You know, from a portfolio point of view, it makes sense to hold Bitcoin. And we did look at a clip from Michael Saylor, who we're not the biggest fan of actually talking about that yesterday. But let's go back to the charts. Even though we're not seeing the volume perhaps on Coinbase, which is the chart that we predominantly use, we are seeing the volume. And look at this jump here on the likes of BlackRock's iShares. If you look at GBTC, which is something we had great success trading, you can see, look at the volume here. Hello. You know, this is confirming, it to say the least. We are still looking at Bitcoin dominance and actually waiting for it to roll in line with how bull and bear markets work. It's being persistent. You know, we are very much in danger of actually this going on and putting in a new high after what we thought was going to be a break of the uptrend it's been in. We'll see how this plays out. But it's really to be watched. And altcoins, of course, are appreciating right now. But the show really is Bitcoin. Bitcoin dominance was something that I don't feel I got the most right. Something that, you know, even though we were looking at getting back in Bitcoin in you know, when it was 16, 15K, one of the few, we are majority altcoin investors because we think they're going to outperform over the long term. And some of our altcoins have, some haven't. Remember, if you look at where we are in regards to the market, you know, we're still at a very nascent and early stage. So I think a lot of the volume perhaps isn't showing up on exchanges like Coinbase because it's going through ETFs. However, the volume is there on the break of a key technical level and a pattern being triggered that's now going to take you to 150K. There are a few things that aren't playing ball on the macro. So yesterday, let's talk about the macroeconomic before we dive into a clip of Tony Robbins. You did have CPI. So if we go back, today's going to be an interesting, it's already been an interesting one with GDPs. We did expect GDPs to actually come out better than people were expecting. It's kind of been the case, kind of not. You know, you had slightly higher than expected inflation in the UK. UK is just a mess on all accounts right now. But yesterday's CPIs, it did come out lower, but not in line with expectations. I even thought it was going to come sub 3. It didn't. It came out at 3.1, which was definitely better than 3.4 than the last one. This kind of cancelled out some rate hikes. Remember, our broader thesis on the dollar is that it's coming down to the lower band of this trend. And we know the correlation between the dollar and Bitcoin. However, they're kind of going up at the same time, and you will get anomalies. And I think the fundamental, if you look at the dollar target that we had, it got run into. We did say, and we're going to take Bitcoin off for just a second, we were kind of a little bit bullish on the dollar on the short term, and you can see it broke. The typical correlation between risk and the Dixie, certainly in an environment of rate hiking, is that dollar up, risk assets down, you know, very correlated. They are moving together at this point. And I think this is more to do with the FX market, i.e. the dollar against the euro and the US economy against the European economy and other nations, than it is this kind of risk on, risk off thing. But something to be watched. We still do think the dollar's coming down. However, it is gaining strength. The beautiful thing, and this is the nature of the beast that you're in, is Bitcoin is doing superbly against it, and so is the rest of the market. So even though we're cautious, from a spot investment point of view, we've been long since the start of 2023. And look at how well we've done. You want to get on board with that, find out what altcoins we're buying, do consider becoming a Patreon. But from a leverage point of view, I think I only have one leverage long on a very small altcoin. Other than that, you know, this is now, in our opinion, on its way to 150K. Just like we were looking here, and people were very pessimistic, in the future, a year's time or whatever it is, we'll be up here and the market will be in a far stronger position. What I want to do with you now, guys, is actually dive over to a clip that was released from CNBC yesterday with Tony Robbins on it. And he brings up a really interesting point. And the reason that I'm bringing this up is because there's a digital renaissance. There's a financial renaissance taking place. And actually, it's going to unlock a hell of a lot of capital to the tunes of hundreds of trillions. And blockchain is really at the heart of it. And if you look at sort of public investment versus private investment, private, you typically need to be an accredited investor. Those walls are being broken down, not only from a legislative point of view, but also from a digital transformation point of view with blockchain. And this is a very exciting future that we're moving towards. So huge success on Bitcoin. It's at $1 trillion. You know, it's broken and now triggered this pattern. It will consolidate at some point. When exactly that's going to be, you know, we'll have to see what the market gives us. And yeah, let's dive into this clip of Tony Robbins, and then I'm going to love and leave you all.
Private institutions, big institutions, pension funds, ultra wealthy people have had access, but the general public has not had access, and most of them don't even understand the impact. For example, in the S&P 500 for the last 35 years, we know we've compounded at 9.2%. It's pretty darn good. You're doubling your money about every 8 years. But you've got 14.2%, not with these guys, with average private equity. So imagine getting 50% more per year compounded for decades. So as an example, if you had $1 million and you put it aside in the S&P 35 years ago, forgot about it, it's worth 26 million. Take the same million, same 35 years, put in private equity, average private equity, it's $139 million. So the ability to get much higher returns with less risk, which is what Ray Dalio's part of this book is about, is understanding the math of how to do that. And there's some new rules that make it accessible for people that are general investors.
It's come down, but let's be clear. And you make this point in the book, by the way, which is the private markets are now where the real money is going. Not to disrespect any of our audience and listeners out there that is going in the stock market. I'd take the 26 million on a million any day and twice on Sunday,
so
Tony.
Most of us.
But the big money is now in the private capital markets. Right. But they've become more accessible, but are they accessible?
Yeah, well, those are two good questions. So the first one is the rules have changed. They're beginning to change. Right now, it used to be 1% of the population could get access as an accredited investor, for example. $1 million net worth, not counting their houses. Most of your investors know 200,000 income, 300,000 for a couple. Today, it's 20% of households. But what's really cool is that I always said, why is it the richest people in the world get the greatest assets and the average person who needs it the most don't? Well, the House decided in Congress that they agreed, and they passed a bipartisan bill that says you can take a test now, because you could have inherited your money. You could be a good businessman but not a good investor. You take a test, and then you'd be accredited. You don't need $1 million. So the Senate's now taking it up. It looks bipartisan there as well. It should be there. So that's number one. But
this is huge. And not only do you have legislation that's sort of making and opening up the private markets, you also have blockchain. We actually interviewed Red Swan, which is a company that's tokenizing real estate on Polygon and Hedera. We'll be releasing that probably on Thursday. And they are basically accessing or enabling access to the private commercial real estate markets via tokenization and fractionalization. This is huge. There's an absolute renaissance taking place. Guys, there is no other more exciting space to be in than this one. We'll keep you up to date with it on a daily basis. Remember, stick to the plan from a price point of view. Get the bigger trend right. Don't waste your time trading unless you're a trained trader like myself. And yeah, enjoy the good times whilst they are here. That's all I've got for you in this video, guys. If you enjoyed the content, like is appreciated. So as a comment, I'm going to love and leave you on that note. Have a fantastic day, and I'll see you all in the next one.